Welcome back. You're tuning to Market Fatafat, where we are taking you through all the stocks that are buzz and trade on the back of technicals or on the back of news flow. And on technicals now, we are joined by Chandan Taparia, who's derivatives and technical analyst, Motilal Oswal. Hi, and of course, on our research team, we are joined back by Ansh. Hi, good afternoon to you, Chandan. Thank you so much for joining us. Chandan, let's get started with all the stocks that are in focus today. ONGC is a big gainer today. In fact, it is the top Nifty gainer for today, and it is on the back. It's up 4%. It is on the back of the upgrade that's coming in from CLSA. Now, the brokerage has upgraded ONGC shares to high conviction outperform from outperform earlier on. They've raised the target price to 360 rupees per share. This indicates an upside of around 42%. Now, CLSA has raised its EPS estimates also by 4 to 8% over FY 25-27. In 2025, ONGC shares have multiple volumes and realization triggers, including the increased production from the Eastern Offshore Field. Now, this is likely to lift ONGC's domestic oil and gas output by 10% and 20% respectively before the end of the year. Further, the removal of the windfall tax may also allow ONGC to earn higher than $75 a barrel realization if crude recovers. The CLSA has noted that despite multiple triggers, ONGC shares are trading at a material discount to its own and its peers' average valuations. And ONGC also offers an attractive 6% dividend yield. And on the back of that, they're maintaining an upgrade on ONGC. And on the back of that, ONGC is up in a way 4.5% in trade today.
Very strong gains coming in for ONGC on the back of that. But Chandan, you've also picked out ONGC for us on the charts. Last 1 year, the stock is up roughly 20%. Last 6 months, however, the stock has been under pressure, seen some consolidation. What's the outlook and what's the way forward for this stock on the charts, and what are the next price levels that you are spotting?
Good afternoon. Thanks for having me. So ONGC recovered well in this month, up by around more than 11%. And this recovery is happening after the decline of last 5 corrective months. It negated its lower top, lower bottom, and earlier it had witnessed a correction from 345 to 230 levels. So risk reward ratio also favors. Negated the lower top, lower bottom, and follow buying is also visible in this week as well. So with support of 255, we believe that ongoing momentum could continue, which can take it towards 280 to 85 marks.
So that's the outlook on ONGC coming in. Let's talk about a stock that's also doing well in trade today, and that's from the railway space. Titagarh Rail is in focus today on the back of a positive news flow that the company has handed over its first driverless made in India train set to the Bengaluru Metro Rail Corporation's yellow line, the BMRCL that is called, the yellow line of that Bangalore Metro. And this marks a significant milestone in India's urban mobility journey. Now, going ahead, also Titagarh will deliver 2 more train sets to the yellow line by April this year, and then the company says that they will ramp up production, delivering 2 trains a month by September of this year. That's what the company has added. So very ambitious production targets, and a continuing order win coming in from Bangalore as well. They have delivered half the order, half of it is still left, and it's an innovative order. It's a first for a company in India, and on the back of that, Titagarh Rail is up more than 3.5% in trade as we speak.
Right, Chandan, coming to you then, you've picked out Dixon Tech for us. Now, Dixon Tech has always been this high flyer that has given some stellar returns, but it has also, moved up so much that how does one play this counter now? What are you seeing on the charts for this? More upside left to this?
Yeah, so Dixon is one of the strongest name. Really, it rallied well in the 2024, and momentum continues. It has been making a high top, high bottom from last 21 long months. And recently, it has given a consolidation breakout on the daily and the weekly chart. The stock took multiple support at 17,500, and a small follow-up can take it to 19,000, and then next leg towards 20,000 marks. So I believe buying interest could continue with support of 17,800. One can look for an upside target towards 19,000 and 20,000 marks.
Okay, so that's the outlook on Dixon Tech coming in. Ansh, you've picked out the big story of the day, we could call it. Zomato is the stock that you've picked out, seeing some deep cuts on the back of a brokerage downgrade. Tell us everything about this note, and also why the stock has been reacting the way it is today.
Right, so Jefferies has downgraded to hold rating with a target price of 275 on the back of rise in quick commerce competition, which is a worry on the profitability. They even expect a year of consolidation here, and they also expect higher discounting possibility this year, which is a threat to medium-term profitability as well. On the back of which we are seeing that they have trimmed their FY26 to 27 consolidated EBITDA by 12 to 15%. Also, if you see in future market, then we are seeing open interest has gone up by around 4%, indicating short build-up, which is a negative sign. Also on chart, we are seeing that the stock has hit 1 month low level and it trades below key DMA level. So yes, lots of bearishness in the stock.
All right, moving on then to the next counter from Zomato, and that is BPCL. Now, BPCL has given in principal approval for an IPO of Maharashtra Natural Gas, a joint venture with GAIL and Indraprastha IGL, Indraprastha Gas, and on the back of this IPO approval, BPCL is in focus today.
Okay, so that's the reason why BPCL is in focus and also doing pretty well. Chandan, you've picked out Laurus Labs for us, and the first name that in fact you've picked out for us from the diagnostic space. Tell us what's the outlook on the charts going ahead. The stock is up 2% as we speak. Last 6 months are roughly 30% return, 45% for a 1 year basis. It's seen a good movement coming in over the last 1 year. Do you expect this movement to continue to sustain going ahead, or time for some slowdown or a reversal if that's what you're spotting on the charts?
So the stock is trading at 3 years high levels, and major trend is positive. We have noticed that every small decline is being bought, and after the consolidative move of last 3 days, it is again gearing up for the fresh breakout. So one can buy with support of 595. Overall, we are expecting a target till 650, 670 zone.
Lourdes Labs on the charts. Coming to you, Anj, again, Hyundai is what you picked out for us, another brokerage candidate. Tell us, what is the brokerage saying on that?
The stock is trading a bit positive today, and Citi has come up with a brokerage report, and they have initiated a buy rating with a target price of 2,250 rupees. And as per that, they believe that strong parentage of Hyundai Motors company will be there, and diverse model, greater proportion of SUVs, and also they believe that there is a higher potential on upside in terms of exports. They also say that there is a possibility of wide sales and service network. Also, the capacity expansion should boost the volumes in second half of calendar year of 26.
Positive note coming in, stock also holding up 1% in trade, looking good for Hyundai. But let's move on. Talk about Info Edge in today's trade, and the stock is not doing very well. Rather, a 4.5% cut coming in on the stock. This is on the back of its Q3 update that it released yesterday post market hours. Info Edge said that its standalone billings during the quarter ended 31st December grew 15.8% to 668.3 crore rupees year on year, as compared to roughly 577 crore rupees in the corresponding quarter of the previous year. Among its business segment, recruitment solutions grew roughly 15.2% to 494 crores compared to 429 crores a year ago. 99 acres for real estate saw growth of 16% year on year, and other business segments also grew 20% to 71.7 crores compared to a roughly 60 crore mark from a year ago. But seems like the street is not taking this update well, and the stock is lower by 4.5% as we speak.
All right, moving on then to a banking name, Chandan, that's what you picked out for us. ICICI Bank is what you picked out for us, and this one has been in a consolidative corrective phase in the last 1 month. Tell us from here on, what are the levels that you're penciling in for ICICI Bank?
So first part is that Nifty Bank is taking support at the lower band of the zone of last 6 months. We have noticed that from June onwards, the Bank Nifty has been holding 49,500 to 50,000 marks. And whenever it bottoms out, ICICI Bank usually works as a trend reversal or the first stop to get the recovery. We have seen a corrective move from 1350 to 1250 marks, and now it is at the verge of forming a bullish price pattern similar to Morningstar. So all these are the reasons that why we are now looking for some bargain hunting in the counter. With support of 1245, one can look for an upside. Target was 1325 in the ICICI Bank.
The level 1325 on the upside for ICICI Bank is what Chandan's picking out. But on that note, time for a small break. We'll be right back on the other side with more stocks that are making the buzz today.
Hello and welcome back. You're tuned in to Market Fatafat, where we are taking you through all the buzzers in trade today. But first up, the domestic PNG allocation has increased to more than 105% of the previous quarter's consumption. My colleague Prakash Priyadarshi is joining us to explain what this means for the CNG and other segments. Over to you, Prakash.
Yeah, it's a very significant development coming in. The Oil Ministry has come out with the details where it has clearly mentioned that the government has now issued new guidelines for the allocation of domestic gas to the city gas distribution sector, considering the fact that the overall allocation for the city gas distribution sector has been reduced. But therefore, but now government has come out with the new guidelines for the allocation of whatever domestic gas is being supplied to the city gas distribution sector, where the priority is being given to PNG customers as compared to CNG customers. Under the new guidelines, what the ministry has released, the allocation of PNG domestic segment has been increased, and that is roughly 105% of PNG domestic consumption in the previous quarter. And the balance available volume to be supplied to CNG segment on a product basis. That clearly means that the priority is being given to PNG segment of the city gas distribution sector, and therefore it's beneficial for the companies who have more number of PNG customers as compared to CNG customers. Along with that, the government also finds it more logical, as it says that the revised methodology is helpful for the CGD entity, as the lag between allocation and the reference period has been reduced to 6 months from average 3 months. And then that will help government to reflect more realistic consumption data. So these are the latest development coming in. And as you are aware that the government has reduced allocation of domestic gas to the city gas distribution sector on back of reduced production, and therefore the companies have reached out to the government to provide relief. So it's a latest development coming in, and the priority is now being given to PNG segment of the city gas distribution. Back to you.
Okay, thanks for all of those details coming in, Prakash. So that's the news flow, the budget-related news flow coming into the CGD and the PNG companies. But let's keep it going with all the stocks that are buzzing in today's trade. And Anand, you picked out Blue Star for us. A negative note coming in from Jefferies, and the stock is seeing the impact of that, roughly 2.5% lower. Tell us what the note entails.
Downgraded their rating from buy to hold with a target price of 2,340. They believe that stock has already rallied by more than 140% in calendar year 2024, and now it is trading at a PE of 60 times FY26 estimated, as compared to historical 5-year average PE of just 41. And they foresee very limited upside post this rally. Also, if you see on chart, then the stock has been correcting for second consecutive session. So yes, after some rally, we are seeing some correction happening here.
All right, moving on then from Blue Star to Coal India, that's in focus today because it has signed a non-binding memorandum of undertaking or an MOU with IREL India to collaborate for mining, its extraction and refining processes. And on the back of this MOU, Coal India is in focus today. It has given up those morning gains, but nonetheless trading in the green, still up 0.4%.
Okay, so that's the reason why Coal India is a buzz, but rather flat right now in trade. Chandan, coming to you, you've picked out Paytm. Now, it's been a high flyer over the last 6 months itself. The stock has almost doubled itself. Tell us what's the outlook going ahead, and is it a case of too much too soon for this stock, or do you think this momentum that we're seeing of this stock doubling in the last 6 months, this could sustain going ahead as well?
So really the stock had rallied well from 310 to almost 1,000 marks in last 8 months. We have seen a major change in the chart and the data setup in the counter. It has been making high top, high bottom on the daily and the weekly chart. But in the recent past, it has been consolidating in a range with multiple support at 940. It is trying to struggle or trying to give a decisive breakout of 1,000 marks. We have positive on India digital theme as a whole, and we believe that this stock can do well. So I believe this consolidation could turn into the breakout, which can lead to the next leg of rally. So with support of 955, we believe Paytm can head to us recent high of 1,060 marks.
To watch out for on Paytm. Let's move on, talk about the life insurance space and two stocks in particular, SBI Life as well as HDFC Life. Now, Centrum Broking has initiated coverage on 5 life insurance companies as it remains constructive on the sector. The favorable macro factors call for a positive outlook, while there are also a few unexpected regulations to be cautious about. The brokerage expects the annual premium equivalent to clock in an average of 17%, so the APE growth of 17% CAGR for the private listed players over FY24 to 27. Life insurance insurance industry is poised to grow depending on favorable macro factors due to the rise in household savings, per capita income and working age population. This is what the brokerage is flagging off, and these factors are also paired with a largely underpenetrated industry according to Centrum as well. Now, SBI Life and HDFC Life are Centrum's top picks when it comes to this space, the private life insurance players that is. The brokerage has initiated a buy rating on SBI Life with a target price of 1,930 rupees per share, which is an upside of roughly 33% to where the stock is trading right now. And HDFC Life has also got a buy rating with a target price of 780 rupees per share, which is an upside of 23% from the current market price. So, strong bullish notes coming in from Centrum Broking for both of these life insurance players, SBI Life and HDFC Life, both doing pretty well in today's trade.
All right, moving on from the life insurance players to IGL, oil and gas is another space that is in focus today. IGL on the back of a note by Citi. Tell us the detail of the notes that Citi has come out with on IGL.
Yes, so they have maintained a buy rating on the stock with a target price of 450. Currently, the stock is trading around 430, so more around 5% on upside, which can be expected. So they have said that the BPCL has given in principle approval for listing of MNGL, which is Maharashtra Natural Gas. So this MNGL is authorized CGD, which is in operation in Pune and is a JV of IGL, BPCL and GAIL. Also, the listing of this MNGL could help unlock value for IGL. Also, companies 2 JVs, which is MNGL and CUGL, together contribute to around 50 rupees per share to their target price of 450, out of which MNGL's contribution would be around 45 rupees per share. Also, if you see on chart, then the stock has been advancing, and in last 1 month we have seen that the stock has given a up move of around 30%. So very strong momentum being seen here.
Okay, so that's the reason why IGL is in focus. Let's move on, talk about Persistent Systems. This IT company is also in focus today because the company has entered into an asset purchase agreement with Messrs. Soho Dragon Solutions India for the acquisition of its identified assets on 6 January, subject to the satisfaction of customary closing conditions. The assets being acquired include select employees, contractors and a customer contract. The annual revenue from these assets is estimated to be $4.9 million. Remember, Soho is primarily in the business of providing IT services to banking and financial services customers, and the total purchase consideration payable for the acquisition is $5.94 million. This includes an upfront payment of $3.2 million and earn-out of a maximum cumulative of $2.5 million over 3 years, which is contingent on the achievement of certain performance thresholds. So acquisition coming in for Persistent Systems, and that stock is up 1%.
All right, with that we come to an end of Market Fatafat. We're completely out of time on this edition. Chandan, Ansh and Osho, who joined us earlier, thank you so much for taking the time out and joining us. On that note, Snehi and I will take your leave. Thank you so much for tuning in. Don't go anywhere because Closing Trades is taking the market action forward.
If you like this video, then like, share and subscribe to ET Now.